The following segment is sponsored by Daniel A. White and Associates. It does not necessarily reflect the views of WDEL or Forever Media.
The Rick Jensen Show on 101.7 FM, 1150 AM, WDEL, and streaming to your smart speaker and mobile device.
Well, I've been a client of Dan White and Associates for many, many years, and quite pleased as well. So every Wednesday after the news at 1:30, Dan White or maybe Andrew Wood or Dan Simon will call in from the company and have a tip, some advice, because the tax, IRS, Social Security, retirement landscape is always changing. Andrew Wood is in the Middletown branch on the phone right now. Andrew, how you doing, sir?
Doing great, Rick. Thanks for having me.
No, I'm glad you're here because we always learn something, and then afterwards I'm so glad I use you guys so I don't have to think about it.
That's part of our job, is making sure, people are staying informed and making the proper decisions. So, really important to stay on top of things. I
appreciate that. So we got some new tax brackets coming?
Yeah, so the IRS just announced for 2024, not that the percentages have changed, but the brackets have changed, and they also have changed the standard deduction. So I think yesterday the number came out in terms of inflation year over year for October was about 3.2%. Obviously, inflation's been a huge issue over the last, we'll call it, couple of years. And in order for... I think, the IRS is looking at this, and in order to avoid what they call the bracket creep, which happens when taxpayers are pushed into a higher income bracket, even though their purchasing power has been the same, they make these adjustments. And typically you see higher adjustments when inflation is higher. So what they're doing is they're increasing the tax brackets, meaning the income thresholds, by about 5.4%. All right, so I'll just give you an example. For a married couple filing jointly in 2023, the 12% tax bracket goes all the way up to $89,450.
Yeah.
All right, and then you get your deduction on top of that. But this year, they have increased that. All right, so that number is going to be going up by about 5.4%. It increases it into about, if I could pull this up,
a little over
94,000.
Yeah, 94,000.
Yeah, so they're increasing that. Excuse me. And then on top of that, they've also increased the standard deduction. So for 2023, if you're married filing jointly, obviously I'm not going to go line by line for every, whether it's single or joint in year by year, but they have increased that from $27,700.
Mm-hmm.
That is going to be increased as well.
Well, that's nice.
So,
now, but understand, you take a look at the Bureau of Labor Statistics, and they calculate inflation. It's a nonpartisan organization. I just want listeners, you know this, Andrew, but I want listeners to know that it's a nonpartisan organization. It serves all members of Congress as well as the private sector, even the Fed. So you take a look at inflation from January 2021 to now, and it's really at 18%. 18% since January of 2021. That's huge. So we look at the year to year, month by month, 3.4 here and there, things like that. Inflation isn't just at 3.4%. I mean, if you've been alive and working since January 2021, this is what you're experiencing, is an 18% inflation rate. And not only that, but there are some goods and services that are not just 18% more. Some are like 30% higher than they were, say, in 2018. So it's extraordinary what's happened to American citizens. And this does seem to me, and you tell me if I'm off base, but this seems to me to be at least a little bit of some relief.
I would agree with that statement. Any little bit is obviously going to help, and it is really the middle class right now that I think are feeling the brunt of this inflation and higher interest rates as well. So at least this is going to provide a little bit of relief. Now, I look at these changes, and with all changes, I'm always looking for planning opportunities and things like that. So right around now is the time when people are starting to implement or do some more Roth conversions and things like that. But, I always look, from a planning perspective next year, especially for those individuals that have they've been retired or they just retired and they have a fixed income. If you know you're not taking advantage of these tax thresholds and the standard deduction, make sure if you have, significant IRAs or 401ks, make sure you're exploring the options for potential Roth conversions, which means you basically pay that over, pay the tax down on that pre-tax money and convert it to a Roth, and now you have a tax-free investment vehicle for the future.
That makes, and you guys have talked about that a lot. It makes sense, because now while you can afford to pay the taxes on it, do that. If you're retired and you have required distributions, you got to take some money out every year after you're 73? Is that what it is?
Correct. Yes.
So you got to take the money out. If that puts you in a higher tax bracket, that's pain.
Yeah, so you can convert as much or as little as you want. Obviously, you don't want to pay too much in terms of taxes, and you do have to pay the tax bill on the amount that you convert. But not to get into politics, but you should know we're $33 trillion in debt. That number is only going to go up. Experts are always suggesting that taxes, if we're serious about addressing the debt issue, we're going to have to increase taxes in the future. That could be 5, that could be 10, that could be 15 years down the road. But if you can take some, appropriate steps now, you can lock in with the relatively low tax, environment that we're in.
By the way,
compared to what could happen in the future.
Not to be picking nits or anything like that, that's what Dad would say. The national debt's it's like 33.7. We're almost at $34 trillion.
Every time I look, that number goes up significantly.
It does.
Yeah, it's only getting worse. Yep.
God. And I was looking at our debt to GDP ratio because I'm, thinking about, China wants our money and Israel wants our money and Ukraine wants our money. And yet each of those countries has debt that's less than their gross domestic product. Our debt ratio to GDP is 138%. Really, our debt is 138% of our GDP. I mean, to me, that sounds like it's worse than being broke.
Well, changes are going to have to be made at some point, and I think everyone realizes that. It's just when and how.
And Social Security, they got to raise the age, raise the amount of income you make. Raise the amount of income relative to Social Security deductions. They got to do that. Something. I know. Otherwise, it's tanked. But you guys are on top of this, and I really appreciate that. Dan White and Associates. Thank you, Andrew.
Thanks for having me, Rick.
Now, Sunday, 7 o'clock in the morning. Dan White himself on the money. What's going on this Sunday?
Sure. So I don't know if you had received this.
I did get. I got the. I got the email. You want me to say it? He's
going to go over income and interest rates and how that could potentially impact, not only your taxes but also your retirement income, retirement savings. So make sure you're listening into that. If you can't, head to our website. It's danwhiteandassociates.com.
Okay,
just we have all of our things listed there.
More detail on what we talked about, plus some other topics as well. You can always reach Andrew, and you can ask for him by name at 888-690-8820, 888-690-8820. And then on the money, 7 a.m., Sunday morning, 11:50 a.m., 101.7 FM, WDEL, streaming live at WDEL.com. Thanks, Andrew.
You're welcome. Thank you.
All right, buddy. Be well.